Let's talk to Connor Campbell. He is a financial analyst for Spreadex. Very good morning to you, young
morning.
Connor. Right, we've got three companies reporting this week. Let's kick off with Foxtons, the stock code, the mnemonic FOXT. Price up or down in 2018, up 3.6%. The gap has been filled, I noticed, sort of up at these levels. What are the headlines?
Yeah, it's sort of just about eked out a rise after a really ropey January. It's had a pretty awful few years. I think in 2017 it was down 20%. That's pretty much in line with what it's been doing for the last few years, since around 2015. It's recently, over the last few months, it seems to have found a range of between like 67p and 85p.
Yeah.
Obviously, the worry for Foxtons at the moment is now it's approaching the top end of that range with what is likely to be a not very good set of full-year figures on Wednesday. I think back in January, like I said, it was awful. That big gap was caused by Countrywide's profit warning. You know, Countrywide, the biggest UK estate agent. That really set the cat among the pigeons for Foxtons. Followed that up with its own January report. Wasn't too good. I think it said that revenue was down 12% to 117 million. The brunt of it coming from low sales volumes, dragging the sales division down, I think 24%. I think there was a 2 or 3% decline in lettings revenues, which, you know, compared to the sales revenue, might as well have been a positive figure. In terms of what's expected on Wednesday, I think analysts are looking for pre-tax profit to fall from 18.8% to 18.8 million pounds, to 8.9 million pounds,
so
which is a hefty. That's, you know, I think that's down 52%, and that's in 2006, between 2015 and 2016, I think it fell from 40 odd to that 18.8 million. So, you know, that's the second year in a row of Foxtons' profits basically halving. So that leaves it in an interesting position, given how aggressively it's sort of rebounded since its February lows. Our clients are selling around the 82.5p mark. I think they're looking for those figures on Wednesday to severely undermine the rebound that Foxtons has seen in the last month or so. I think put it back more in line with the kind of decline it saw across January.
Understood. Okay, let's move on to Taylor Wimpey, the stock code TW, down 7% in 2018. What are your thoughts there?
Yeah, down 7%. That's all roughly in line with just the housing sector in general. You know, the house builders have sort of had a rough start to the year.
Rising interest rates.
With those rising interest rates really sort of really sparking a quite aggressive sell of it since the start of the year. However, you sort of move out a bit, and Taylor Wimpey was up, I think, 35% across 2017. Had a very, very strong year. One of the best house builders in terms of market-wise performance. In terms of what it's going to do this week, I think in January it released an update that, you know, got most of its key figures out there, really. I think completions were up 5%. Its operating margins were up from 20.8% to 21.2%. Which is a nice little rise. I think it said it had net cash of £512 million, and that was after paying a dividend of £450 million. It said it was going to pay a total dividend of around £500 million across 2018. So very, very nice figures, you know, nothing to really quibble with. However, given it was sort of around the time when people were concerned about interest rates, I think the CEO had said that 2018 would be a good year, but not as strong as what had been seen. I think investors read that as, oh my God, it's going to be a slowdown, slightly overreacted, and you can see that's where it sort of gapped at the start of 2018 there, and then just continued as those interest sort of rate fearing like movements increased. Yeah. In terms of what it does on Wednesday, I think if it can post, you know, anywhere near the kind of figures, say, like Persimmon posted, I think Persimmon's pre-tax profit was up 25% to just shy of £1 billion. If Taylor Wimpey can post similar kinds of pre-tax profit growth, and there's nothing to say it can't, then it should see the same kind of bounce. I think Persimmon was up 11% after those figures. Sort of investors willing to push those interest rate fears to the side somewhat if the company can show that it's still incredibly profitable. From our clients' perspective, they're really, really aggressively buying. They've been buying since it fell towards 180, and they've continued to buy since it's climbed back towards 190. I think they're seeing it as being slightly oversold across January and the start of February, and they're looking for the full year figures on Wednesday to sort of reassure them that Taylor Wimpey is going to be fine across 2018.
Understood. Okay, well, let's move on to the last one. ITV up 4% this year, mnemonic ITV. We've obviously got a new commander-in-chief at ITV. First set of numbers, I think they're reporting. What are your thoughts there? Yeah,
it's moved quite laterally in the last few months, but that is following overall a pretty bad 2017. I think it was down 20%. What's interesting on Wednesday is going to be how much slack investors are going to be willing to cut the company because they've got a new CEO, and that you could see it as the marker of a new era for ITV, especially since they're gradually shifting their focus towards ITV studios and content creation. It'll be interesting to see what kind of statement Caroline McCall makes around that, and whether she intends to continue that shift towards content creation, to compensate for the slowdown in advertising revenue. I think in terms of its figures, advertising revenue is going to be key. Back in November, it said that for the 9 months, I think it was to the end of September, total revenue had fallen 1% to 2.1 billion, and that was with net advertising revenue dropping 7% for those 9 months. I think it actually only fell 4% in the third quarter. It shows an improvement in the second half of the year, but 7% is still a pretty nasty drop. In terms of its full year net advertising revenue, I think they're expecting a 5% drop in total, but that's with the fourth quarter seeing a 1% rise. So that seems to have turned around slightly as the second half of the year's gone on. I think investors are going to be looking for some kind of what the forecast is going to be like for 2018, whether the first quarter of the year has seen the continuation of the net advertising revenue picking up once again. In terms of ITV Studios, for the 9 months to the end of September, I think revenue there has risen 9%. Investors are, ideally, if that can creep into double-digit figures, investors are going to be very happy. But like I said, I think in terms of the reaction on Wednesday, it's really going to be down to what Caroline McCall says and what kind of tone she sets out. I think already she's shown a willingness to change things up at ITV. She's changed the negotiating strategy with Virgin Media. At the moment, they're discussing how much Virgin will pay to carry ITV, and I think she's sort of dropped trying to get them to pay hard and fast for the channel itself, but instead go for a sort of a wider ranging package that will still see Virgin Media pay more than they did, but I think still carrying the key ITV channel for free. So it's it'd be interesting to see. She's obviously shown a willingness to do things differently. How much of that will feed into the report on Wednesday? In terms of our clients, they've started to buy around the 170 mark. They've started to come in around that level now. I think obviously, firstly, it's fallen so sharply in the last few years that there is room for it to swing upwards now. And like I said, it's the start of a new era. I think investors might be willing to cut it a bit more slack, even if its figures, say, do disappoint, because you've got that new CEO in charge. I think this will be seen as a changeover set of full year results rather than the harbinger of anything good or bad, really.
And obviously, there's all been speculation, hasn't there, tie-ups with Liberty, etc., over the previous years in terms of any corporate activity. Right, on that note, Connor Campbell, financial analyst for Spreadex, thank you very much for your time.